Make better money choices. Choose a bank that takes your money seriously. Business Watch is brought to you by Nedbank. $1,400. You're watching Nedbank Business Watch. Thank you so much for joining us on the program this afternoon. Here's what's on your agenda. Eswatini's youth make up nearly 73% of the country's population, yet many continue to face limited employment opportunities. Now, as the world transitions towards greener and more sustainable economies, new career paths are emerging in renewable energy, sustainable agriculture, waste management, and climate-smart entrepreneurship are some of those new emerging trends. Now, this afternoon, we want to explore how these opportunities can really empower young people to become not only job seekers, but also job creators. Likusasa Lethu, together with the Eswatini Climate Change Youth Parliament, will be hosting a workshop aimed at equipping youth with the knowledge as well as the skills to tap into the growing green economy. We'll be joined by Nkosi Nathi Dlamini. He is from Likusasa Lethu's Communication Office. He's going to help us discuss the upcoming engagement, why green jobs matter, and how young people can position themselves to take advantage of this rapidly expanding sector. Also on the agenda this afternoon, a dramatic collapse in trade between Eswatini and the United Kingdom. New official figures from the United Kingdom Department for Business and Trade show that bilateral trade plunged by 87.5% in the year to December 2025, with UK imports from Eswatini falling to less than £1 million, a staggering 100% a decline from the previous year. And what is driving this sharp contradiction and contraction is a big question that we want to ask. Is it a temporary market adjustment, or does it point to deeper structural challenges facing Eswatini's export sector? We're going to unpack the numbers as well as the implications for trade, for investment and economic growth with our economist, Sonela Sibia. It's a good afternoon once again. We'll look at our business news to kickstart our program.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Now, first story, Finance Minister Neil Reichenberg says a transparent tax system positions the kingdom as a highly competitive investment destination. The Minister for Finance has said this during the launch of the inaugural tax law reports covering the years 2023 to 2025. It was held at the Royal Villas in Eswatini, and the reports are expectedly to play a very important role in developing Eswatini's tax jurisprudence by delivering reasoned decisions that provide guidance on the interpretation as well as the application of tax laws.
For the Revenue Appeals Tribunal, these inaugural law reports serve three critical functions. The first one, is building certainty and public trust. Taxation can often feel complex and intimidating to businesses and citizens alike. By publishing these reports, the tribunal provides a transparent record of how revenue laws are interpreted. The second one is standardizing the application of revenue law. In law, consistency is the bedrock of fairness. These reports establish clear precedents. They ensure that similar cases are treated with the same high standard of legal reasoning. The third one is enhancing institutional efficiency. When past judgments are documented and easily accessible, future disputes can be resolved much faster. Lawyers and Eswatini Revenue Services and taxpayers can reference settled points of law before a case even reaches a full hearing.
The publication of the first edition of Eswatini Tax Law Reports is significant progress in the tribunal's mandate as it makes key decisions more accessible to legal practitioners, tax professionals, businesses, academics, and the general public, further strengthening the rule of law and tax administration in Eswatini. Commissioner General of the Eswatini Revenue Service, Brightwell Ngambule, says these reports will help the country to move from dispute resolution to dispute prevention.
Tax administrations operate at the intersection of law, economics, governance, and public trust. The ERS has the responsibility to collect the revenue required to fund public services and national development. Taxpayers equally have the right to be treated fairly, consistently, and in accordance with the law. Where disputes arise, it is important that there is a credible, efficient, and independent mechanism and body to resolve them.
Speaking on behalf of the private sector, Business Eswatini CEO Inathi Dlamini says businesses do not seek a low tax rate, but a system that is fair, impartial, and consistently administered. Meanwhile, Attorney General of the Kingdom of Eswatini, Sfiso Khumalo, assured taxpayers that they are covered in the reports, adding on their legitimacy.
Compliance improves because taxpayers have greater clarity about the law. In many instances, disputes can be avoided altogether. One of the recurring messages from the private sector is that businesses do not simply seek for low tax rates. Rather, they seek tax systems that are predictable, proportionate, transparent, and consistently administered.
This publication represents more than just a release of a legal text. It signifies the strengthening of our legal system, institutions, and the promotion of transparency in tax adjudication.
The Revenue Appeals Tribunal is an independent body established to hear and determine appeals from taxpayers who are dissatisfied with tax decisions made by the Eswatini Revenue Service. Since its establishment, Eswatini has received improved rankings by the International Monetary Fund, having been listed among countries with a mature revenue administration in the world. Reporting, Notsiles Tole, Vumgosinzinisa, Ezulwini.
Since its inception in 2022, the Revenue Appeals Tribunal Eswatini has received 44 tax appeals and has successfully adjudicated 36 cases. Well, this was revealed by the Registrar of the Revenue Appeals Tribunal when presenting the tribunal's objectives in tax adjudication, providing a brief update performance report during the launch of the inaugural tax law reports. The launch of these reports was held at the Real Villas in Ezulwini.
Since inception, the tribunal has received a total of 44 tax appeals, spanning across all the domestic tax legislation in the country, and also some touching on international tax bodies applicable as well in the country. These matters reflect the scope and complexity of tax dispute falling within the tribunal's statutory mandate. I am happy, Honorable Minister, to mention that the tribunal to date has diligently adjudicated and completed 36 appeals cases. demonstrate the members' commitment to delivering well-reasoned, fair, and legally sound judgment. With only 8 cases pending before the tribunal. The matters pending, they remain actively enrolled and are being processed in accordance with the applicable procedural rules of the tribunal. This performance reflects our continued commitment to efficient case management system. I must add, Honorable Minister, that at the Revenue Appeals Tribunal, we don't have offices for backlogs of cases. It is now incumbent upon the tribunal minister to pause and pay tribute to those whose vision, dedication, and commitment has shaped the success of the tribunal to date.
All right, let's go for a net break now. We'll come back with a conversation with our economist, Sanele Sibia. We also do want to extend profound apologies with regards to that interview we had scheduled with Ligu Sasa Letu. They can no longer join us due to reasons that are above them, but hopefully we'll connect with them sometime next week. But after the break, we are in conversation with Sanele Sibia regarding the official trade statistics revealed and released by the United Kingdom Department for Business and Trade Paint.
Those that are in pain must forget all the problems they have. Because the things of the earth have got no answer. But the answer that we have is all morning. When I'm preaching here, I'm preaching to myself. I receive the Holy Spirit.
I declare that a turnaround is coming my way.
Turnaround is coming in my life.
Hello to all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@escom.org.za. For more information, visit www.escom.org.za.
welcome back. Official trade statistics released by the United Kingdom Department for Business and Trade paint a concerning picture of Eswatini's commercial relationship with the United Kingdom. Total trade between the two countries fell by 87.5%, and that is only in the 12 months ending December 2025, declining from 24 million to just £3 million. Even more striking is that UK imports from Eswatini dropped to less than £1 million, and that represents a 100% decline from the previous year. While exports from the United Kingdom to Eswatini also declined by 25%, UK investment into Eswatini actually increased by 50% to £18 million at the end of 2024. Now, the figures raise important questions about the competitiveness of Eswatini's exports, as well as the country's trade diversification strategy and the future of bilateral economic relations. Sanele Sbia chimes in now. He joins us virtually. Sanele, thank you so much for making time. It's going to be quite the conversation with regards to the time that has been allocated for this one, and rightfully so, when you look at what is pertained in this report. The first one being the headline figure, which is 87.5% collapse in bilateral trade between Eswatini and the United Kingdom. Just how significant is this decline in economic terms?
Thank you, Mr. Ngumalo. I think, number one, where we need to start off, good afternoon to you, and also good afternoon to everyone. So where we need to start off, Mr. Ngumalo, is the issue of losing a market, because when you're seeing these figures in terms of trade plummeting 78.5%, which is a £21 million drop, right? So right now we are talking around £3 million in trade between the UK and Eswatini. So now that, to me, signals a loss of market, right? And what we are seeing, though, is it's never good for a country to lose a market and to lose that share. So we are going to have those sectors that are going to be hit by this, which means that they have to find new markets. Overall, when you look at the picture, Mr. Ngumalo, what it signals as well is the fact that probably Eswatini is growing and diversifying its markets, because when you look at our domestic trade statistics, and when you look at our statistics, over the past 2 years, we've been talking of growth above the 4% mark. So now that shows that regardless of this downward spiraling in terms of trade with the UK, we seem to be diversifying and finding other markets to maintain this level of trade that we've always had as a country, and somehow ensure that we are able to remain competitive. So, but the long and short of it, Ngumalo, is we are losing a market, and that is never a good thing for a market to be lost. But when you look at it, it is something that had to happen post-Brexit. Usually you see effects of such an inward and insular-looking economy that was shown by Brexit, that the Brits are now looking inside and they want to protect those low-end jobs and those agricultural jobs, those transport sector jobs. And effectively, what we were sending into the UK market was mostly agricultural products. So we're seeing that interplay. But the fact that we've been able to find other markets and ensure that we are able to grow at that level as a country is actually a good indicator.
Yeah, just by way of making our viewers understand why your voice sounds like this today, you are joining us telephonically instead of the normal Zoom virtual video link that we normally use. But very, very important submissions that you make there, Sanele, because indeed the report shows that UK imports from Eswatini fell to less than £1 million, effectively wiping out exports to that market. I think the bigger question then becomes, what could explain such a dramatic collapse? It's very dramatic.
So it's been a couple of factors, Mr. Ngumalo. I've already hinted on Brexit. Now that was post where you are seeing the UK looking insular, even pulling away from the European Union, where we saw a lot of this bilateral, where we saw a lot of this trade with the EU, with the UK occurring. And remember, as a bloc, the UK was trading under EU regulations. So now, post-Brexit, we've had to rethink how we then find access to those markets. So now that's one of the factors that we've seen happening there. And then also another factor, Mr. Ngumalo, if you go back to the 2012, we've seen a bit of a pull in terms of preferential access to the UK market for the Kingdom of Eswatini, and I mean that it also included the denudation of the sugar protocol, amongst others. And we've also had, those trade in bovine products and those preferential access into that market. So there is that structural change in the geopolitics and the trade politics around why we are now having a bit of a hard time accessing the UK markets. But this is something that we have been planning on for the longest time as a country, and that is why we are able to diversify the market outside to other markets that were relatively less competitive. But the issue of competitiveness, yes, does speak into the fact that we are losing markets. So you could say that we've lost significant economic advantage there, because mostly we were participating under preferential trade agreements. So now when you see a denudation of such agreements, that means you have to remain competitive at market levels. And we've shifted as a country to find these other areas where we remain competitive as a market. If you look at, for example, our commercial footprint as a country has actually increased dramatically. That's where most of our agricultural products are, being the sugar and the fruits and veg and other products, are now really just destined for that market, because we're finding places where we have that relative competitive advantage in. So that's why we're seeing this denudation or this pullback in terms of the markets. And then also another issue, Ngumalo, is potentially the Brexit instruments that were being used. So right now, we found ourselves as a country having to find ways of how do we now trade with the UK now that they're no longer part of the European Union. So part of it could be a lack of that move towards establishing those ties and reigniting those ties. And also remember, with Brexit, we had an insular Britain. And when you look at the insular United Kingdom and what we were taking into the United Kingdom, you'd find that those are the issues that would somehow lower the trade volumes between Eswatini and the UK. But on the positive front, if you look at the UK's appetite for investment in Eswatini now, that seems to have all at the same time increased, to the 600, and there's actually increased by a significant figure, around 600 million pounds. I've just lost the report right now. So now that shows that, UK financial institutions, it increased to 18 million pounds. Now that's the right figure, 18 million pounds. So from about 6 million in 2023. Now that's a sign that the UK is looking at growing certain industries. That's a sign that Eswatini is investor already in certain other industries, but we are looking at those multiplicity of issues that Mr. Nimalo playing into culminating to this picture.
Yeah, and of course, now looking at the commodity breakdown, exports such as sugar, vegetables, and fruit, as well as clothing, they recorded substantial declines. What does that tell us about the health of Eswatini's export industries?
So thank you, Mr. Ngumalo. Again, it's an issue of competitiveness. You find that there's a reason African countries are always fighting to have AGOA, because it does give us this preferential access to those markets, and without the right industrial outputs and capabilities and volumes, you find that countries like Eswatini and most African countries find it difficult to penetrate those markets. So what we're then looking into in terms of the health of the nation, we've already stated that We've seen, for example, with our sugar diversifying into the commercial zone. We've seen with our textiles, post AGOA and post all those protocols being denuded in the European Union. We've seen a shift towards the South African market. So in as much as we are losing certain markets, but we seem to be adapting and landing on our feet in terms of finding areas in which we have that competitive advantage where we can still send our products and still be bought and we're able to get that competitive edge. But it also speaks, Malo, to an urgent issue of saying how are we investing as a country to unlock that industrial capability and capacity so that we are able to service even those high-level first world markets, which have so many standards before you can have your commodities go into those markets. So you find that there's quite a lot of non-trade barriers that also come into play, like you have something called the phytosanitary requirements, which are basically the health standards that need to be met when you have markets going, when you have commodities going into the European markets, with commodities going into the UK markets, into the US markets. There are standards that must be met. So you find that we lack those testing capabilities and those testing facilities. Right now, we are talking of this issue and we know that already we now have foot and mouth. So we know that there is that market that we have been lost at the early stages of the foot and mouth disease. So we should see another decline going into when we see the 2025 numbers eventually come out because we would have failed to meet that vector control, and now that builds into the phytosanitary requirements for trade, and that would require that as a country we invest in that vector control and invest in our testing capacities and invest in the general cleanliness, and then have those standards, meet those ISO standards for international trade, because now that would make it easy for our commodities to go into those markets. So we still have a lot of non-trade barriers that we have to deal with as a kingdom, and that requires investment so that we are able to access such markets. But yeah, the bar is set a bit higher for access to those markets compared to selling to the regional partners. That's why we find ourselves pivoting into the commercial markets and pivoting into the African markets. And right now we need to do our best to penetrate the Africa Continental Free Trade Area, because you find the standards there are relatively lower compared to the standards in accessing those advanced markets.
Yeah, Mr. Sibiya, before I let you go, I know you hinted on Brexit, but I also do want to ask you just directly if this decline could primarily be the result of domestic production challenges here at home in Eswatini, or other international market conditions, equally to blame, or the primary reason to blame?
So for me, if you look at the sectoral breakdown that we just gave, Mr. Nxumalo, we have fruits and veg, we have sugar, and we have textiles, right? So in terms of capacity, we've not somewhat found ourselves lacking in those areas. But what we've found ourselves battling with as a country is having to compete at a one-to-one level. So yes, I would agree with you that it's mostly on the productive capacity, but not the fact that we lack the capacity, but the fact that I think we haven't industrialized enough to produce and be able to compete at market levels when it comes to accessing those markets. But, historically, our bilateral trade with the UK has always been on preferential access to markets, right? And when we then had Brexit, we saw a lot of things happening. The UK now standing on its own, yet we were, for the most part, now negotiating with the European Union. So once we lose those preferential access as an economy, we tend to then lag behind, which is an issue of saying, let us invest in our productive capabilities so that we are able to remain competitive at market levels, even without the preferential access to those markets.
Thank you for your time, Mr. Sibiya. We really appreciate your insights. Sanela Sibiya, our economist. For now, we'll go for a net break. I speak to Zamangwane as we reflect to a conversation that I had with her on some of the investment opportunities from Nedbank Eswatini. Stay with us. Welcome back. You're still watching Nedbank Business Watch. Thank you so much for staying with us. Our conversation today with Head of Branch Networks from Nedbank Eswatini, Zamangwane, is centered around investing, which is one of the very essential topics, but very overlooked in most cases. And a modern poet, which is a rapper, has said before that scared money doesn't make money. So you do want to invest your money. So let's demystify the myths around investing and make you motivated to invest whatever it is that you are saving on the side. Zamangwane, thank you so much for joining us on the program. Perhaps I want us to start here. Nedbank loves to interact with customers across different income levels, right? Are you seeing a shift in how the ordinary Liswati or how the ordinary Emaswati view investing in particular?
Good afternoon, Mnguni. Thanks for having me. I think your quote just is running through my mind. Yes, we are seeing a shift in how Emaswati view money. In fact, we really appreciate that the conversations are happening. The conversations must happen. I think money is relatively tight for all of us. And as Nedbank, we believe that we are the financial experts. So we always want to help customers and consumers understand how to manage their money better and also how to grow their money. I've mentioned that money is tight. So, of course, we start to think of how do I get to save for the future? How do I make a saving when an expense goes up? Or we're in a situation now where we're seeing even fuel prices are going up. So in turn, even the cost of goods will certainly go up. Emaswati are alive and conscious to what options do I have and how far does my money take me currently?
Yeah, a very tight fiscal space for almost everyone, and you're right on that one. But there's often the conversation around starting small.
Yeah.
You know, and, I want to understand how Nedbank is enabling its customers there to really begin investing even with the modest amounts.
I think you are touching on it with respect to some of the misconceptions that people would have around investing. One would typically assume that you need to have a lot of money to start investing.
Yes.
But to your point, you just do need to start small. So in terms of if you have maybe 300 malangeni or 500 malangeni, it is important that you actually start putting away what you can actually afford. And over time, that amount grows as long as you maintain consistency. And it will help you to fulfill and close some of these fiscal gaps that you are mentioning, or also moves you a step closer in terms of some of your financial goals and aspirations.
Absolutely. From a Nedbank perspective, how do you help clients understand the difference between saving and investing and why both are important?
Yeah, so savings and investments are closely related. Sometimes it's difficult to make a distinction. But the key difference is that they're usually for different purposes. So saving is typically for your short-term needs in terms of your short-term financial goals. So that's either you're saving for a holiday, you're saving for some immediate expense, school fees, uniform, groceries even, and even if we're saving for a full tank for every end of the month. Whereas investment is more of a long-term goal. So that's when you are saving for bigger financial goals, whether you want to buy a car or make a hefty deposit on a car or a property purchase, as an example. So basically, we say that it's important to have both of them because they serve different purposes. Short-term, in the savings, maybe for your emergency kind of expenses that may arise. You don't know what will happen at any point in time. So you want to create a buffer for yourself.
Absolutely.
And then investments as well, it serves a different purpose because you have a specific long-term goal that you want to attain and you work consistently to get to it.
Yeah, and so how do you propose Nedbank comes into the play now in supporting its customers in building that, what you call a balance between short-term financial security as well as long-term financial or wealth creation?
I think it's important to have conversations with yourself that are honest with respect to how you want to, what you want to attain. Is it wealth creation that you want to attain? And then or is it an immediate cushion like we've spoken to? And what are you actually saving or investing for? So in terms of what we present as the bank is basically options that fit different risk appetites. Our risk appetites may not be the same between Zama and Sfiso.
Yes.
Our goals may also not be the same with respect to what we are saving for and how long we want to save for. So those are the key things that you would want to actually ask yourself and align in that. But in terms of the offerings, of course, there's a spectrum of options that fit those different variables to say, is it short-term, long-term savings, accounts, notice deposit accounts, fixed deposits accounts, retirement annuity, unit trusts and shares. All of those are options that build wealth creation or create a buffer depending on your immediate need.
Let's talk to that first-time investor walking into a Nedbank branch today or tomorrow, whatever. How do your teams then guide them in choosing the right product for their needs? I mean, you mentioned a plethora of products there.
So I believe that your need is actually what helps us to determine. Remember, I did say that we are financial experts and we also want to help you create your financial risk.
Yeah.
But underpinning that, the initial guidance would be to say, start simple, with as minimal or as low a risk as possible. So these options can include, fixing your money for a fixed term, which means putting away the money and knowing that you're earning an interest.
Right,
you're earning interest or compounded interest over a period of time. Or a notice deposit account. That's more medium term to say, I'm going to put away funds for a certain period of time and I'll give the bank notice when I want those. But those funds, whilst they're placed there, are actually earning you a return as opposed to sitting in your purse or under a mattress.
Absolutely.
Yeah.
There's often a conversation around time and discipline. And that's very key in investing, right? That's what you say.
Yeah.
How would you say Nedbank then encourages and supports a culture of consistent investing among its clients?
I would say that you mentioned the element of time, and probably time is the best indicator and probably the most powerful tool to have. Time is always of the essence, and we always say start early and start consistently. Because the benefit of investing is that you earn the interest, and when you earn, you then start to earn compound interest. Yes. So what that means is that you earn interest on the fixed amount that you've invested, and then you earn interest on the interest that it's earned as well. So if someone starts saving at 20 years old, over time, even if they are saving smaller amounts vis-a-vis someone who might start saving or investing at the age of 40 as an example, but they're putting in larger sums, you would find that the one who started much earlier with the smaller amounts is actually making more based off of the time elements because their interest has compounded significantly. So that is where then the time element comes in to say you start to grow your wealth more. And the consistency ensures that this wealth is actually growing consistently as well. Yeah.
So while you speak to the 20-year-old. I love the example. You're making an example of a 20-year-old and a 40-year-old, and you break down how compound interest can be life saving for both of them, but particularly for the one who started early. And it just makes me wonder, because we often hear people who get into employment early say, I want to enjoy my money first. And, do you want to talk to that person, that young person right now?
I do want to talk to that young person. I mean, just last month we were coming from the Global Money Week where we raised awareness on this. I do want to talk to the young person because there's not a right time, if I may say. The only right time is now or immediately when you come to that realization. Though I made the example of the 40-year-old, it doesn't mean that we can't start today. And also, it doesn't mean that you have to start investing with a large sum of money, or I can't afford it, or I'm just not the investing type, etc., whatever you may tell yourself.
Yeah.
But I would say, yes, start small. If you want to enjoy your money and you're enjoying your money as the 20-year-old, then surely you want to enjoy your money for a longer period.
Absolutely.
So you want to create a fund for your enjoyment. Make it be consistent. Allow yourself to have a consistent life of enjoying. So I would recommend that they absolutely do save. They've just started working, like you've said. They consider options of short-term and long and medium-term type of investments. They create emergency funds at a minimum, so that should the fund go a little bit lopsided, they have a cushion to bail them out, if you may. So I would recommend that they just maintain the consistency. There are various options in the market, and there are various options that are sold by banks and financial institutions that would fit that profile of a customer. So it's all about, once again, determining your needs. What does that 20-year-old want in 3 years, 5 years, 10 years? Or what do they want in 6 months or a year? That's part of this enjoyment phase.
Absolutely. So I take it that next to time, the next critical thing is discipline.
Correct.
Because that then informs the consistency, and the consistency is essential, as you put it, right? But from your experience, what would you say are some of the most common mistakes that your customers make? And then how does Nedbank come into the play now to make sure that these people avoid these pitfalls?
Yeah, I think we've just touched on some of these. Common mistakes. It's the voices in your head to say, actually, I don't make enough money. I'll start investing when I make more money, or I'll start next year. And we're having a conversation at an apt time. It's Q2. Let's review our, what do they call them? Goals.
Yes.
What are the goals that you've put in for the year? Let's take stock. Am I still on track? Am I still doing what I wanted to do? Are my financial aspirations still in order? And it's okay to start over. So do start over, and any time is appropriate time. But also, I do want to stress that the longer you have or listen to these voices or delay, then you lose the element of time that we've just spoken to.
Yeah.
Which means that the value or the creation and wealth that you're trying to build or create is also slightly impacted. But that's not to say that you can't build the consistency and add additional income into your savings and investments.
Absolutely.
But those are the common mistakes that we find. We also find that people may not understand the risks associated with some investment options. So I would also encourage customers to do their due diligence, to research, to find out what works for them, to understand how the products work for them. I mean, we see a lot of cases of bofaqata, as an example, where you know, something seems too good to be true. Invest 300 and we will triple your money in 2 weeks.
Come on now. Yeah.
So those kinds of examples should be red flags and triggers of going off. So you have to be sure that you understand the risks. You have to be sure that you are comfortable with the risk you are taking in terms of the appetite. When will you get your returns? How long will your money sit there? And do you understand what potential risk there could be there with respect to the interest that you earn and the like? Yeah.
Absolutely. So I take it quarterly reviews, if you will, of your goals, very, very essential. But also being realistic about your goals and ambitions, very essential as well. Imposter syndrome, you know, that time that is delayed, you're saying it's not denied, but it's very important to know how to have that conversation with yourself. And I think if you're able to, you know, vet those mistakes and make an informed decisions, then you'll be good. I want to give you just one last opportunity to speak on whatever I may have forgotten to ask you about, because we're done with this conversation.
Yeah, I think I want to reiterate the 3 things that we spoke about with respect to choosing your investments. Reevaluate what's your financial goal. That's the first one. So you must make sure that you determine what is your goal. Also, how long are you willing to put your money aside for? So is it short term? Are we saving for emergency, or are we saving for a long-term goal? And then how much flexibility do you need? Will you need the money immediately, now, or how would you want to access your funds? And how would you want to contribute to your funds? So those are the three main things that I would highlight in terms of the selection or the choosing of investment options, and then the consistency. Keep in mind the consistency, the diligence, the discipline that we've spoken about. It doesn't help. Your quote is talking about risk to some extent, but also we see a note that, you know, you'll put away some money in a savings pot or whatever the case may be, but when you feel like, I'm really broke and it's a week before payday, so you start to tap into that, and that sort of erodes the discipline, because part of the discipline is invest, tuck the money away, but also learn to live within what is then remaining. That's why we encourage that you save what is affordable to your pockets. Don't overstretch yourself.
Overstretch yourself.
Yes.
Absolutely. Zama, thank you so much for your time. Zamangwane Dlamini, Head of Branch Networks from Nedbank Eswatini, decided the most powerful tool for financial growth, and that is investing. And there you have the conversation. You can make an informed decision as you invest, whatever it is that you can invest. Very important. Let's go for a net break. The show continues when we return. Welcome back in studio. We have Bongani Mabuza, the head of Treasury from Nedbank Eswatini, and this is our market analysis. And he was just briefing me about, this brief calm in terms of the geopolitical issues happening around the world, particularly the United States of America as well as Iran. That is once again dominating the global financial markets. He's going to give us his insights about how that is indeed showing face in our numbers today. Bongani, thank you so much for your time and welcome to the program. Perhaps, an understanding what this latest escalation really means and what it tells us about the global market sentiment right now.
Yeah, thank you, Swiso. Good afternoon to you and good afternoon to your viewers. It's a real pleasure to be here.
Thank you.
As you rightfully say, we had a calm which we were hoping would be long. But for the time being, it seems to have been short-lived,
right?
Which was the 60-day ceasefire between the U.S. and Iran. So what happened, I think, in the past day is that the U.S. struck Iran, and Iran also struck some vessels within the Strait of Hormuz, and also struck some of its neighbors in the region.
Yeah.
So you have had then subsequently the U.S. president essentially saying the deal is now off.
Right.
The deal is now off, and as you'll see, markets have reacted sharply to that. It changes things, and we're now back to a risk-off sentiment from the market's perspective.
Are we expecting oil prices to surge once again? And particularly because in Eswatini, a lot of Eswatini were just celebrating a marginal drop, and some news that we are seeing on let me just call them blogs for now, that we should expect another drop really soon. Is that going to take a spin-off again?
Yeah, 100%. It might be too early to tell. Depends on what happens from now on. But as you actually say, in terms of the pumps, we saw fuel drop by 1 rand a litre for petrol, 3 rands a litre for diesel.
That essentially gives me about 4 litres per 100 rands. Gives me 4 litres now. What am I saying?
It puts back quite a bit in drivers' pockets.
Yeah.
In the pockets of Eswatini. And the expectation was that with the extension of the ceasefire, the prolonging of the ceasefire, you would see that gradually drop to closer to pre-war levels, which is good from an inflation perspective.
A lot of relief.
So that basically changes that. I mean, you saw the oil price react quite sharply. It's up more than 6% today, just today alone on the base of this news. So that it changes things, but it all depends on what happens from here onwards.
Yeah, and of course, you always use the phrase or two word, safe haven, and we always see investors move to safe haven assets during times of this sort. Which assets are benefiting the most right now?
We can look at it in terms of different asset classes. From a commodities perspective, oil price, as we say, is up. I think that's because of the supply constraints that have now been reintroduced into the logic of investors. In terms of currencies and currency pairs, what we're seeing is a move back towards the dollar as a safe haven asset. So the rand, which had been strong, and the langeni have taken a backseat as this risk-off sentiment plays itself out. You see investors pull money out of environments or asset classes they deem as risky, which includes the basket of emerging market currencies, including the langeni, into safer haven type of assets, which include the US dollar.
US dollar. And perhaps on that very same topic, which sectors then feel the most pressure?
So anything that is deemed as risky, as high risk in this environment, or not likely to benefit from this current environment. So to flip the question, you could ask which sectors benefit the most. So the most obvious answer is oil companies, or companies in that industry. So
energy
if you look
sector,
in the energy sector in general, so you could look at the big oil majors, as they are called. Those would be beneficiaries in this environment because they get to charge a higher price for the commodity that they market.
And we have seen, of course, a lot of airlines and transport stocks come under pressure while energy companies gain, like you are just submitting now. Is this the typical sort of thing that happens when geopolitical crises arise?
100%. I mean, not just geopolitical crisis, but it's a shift in investors' mindsets in terms of supply and demand, and not just current supply and demand, but what likely future supply and demand is going to look like. I mean, just to go back a few years back, at the start of the COVID pandemic, you saw the same thing play itself out as investors recalculated what the pandemic would mean in terms of demand for flights, in terms of demand for vacations, etc. So the same kind of logic, perhaps on a much smaller scale, is playing itself out.
I want us to get into the numbers, just looking at the time that we have remaining now. If you could just take us through your numbers today.
So maybe we can start with what has happened from an FX perspective. We have covered it to some extent, but if you look at where the langeni is against the major currencies, being the euro, the dollar, and the pound, the langeni has taken a bit of a backseat against those currencies. We are at 16.28 against the US dollar. We are at 21.87 against the euro, and at 18.7 against the pound. So what that essentially means is that, as I said, we've seen investors pull out of the langeni as a risk asset and more into the major currencies as safer haven assets. And this is playing itself out. If you're looking at the start of this week, we're at around 16.20 against the dollar, for instance. And we're having a really good run, which was showing itself to be strong. But that seems to be reversing to some extent.
Yeah. And then, of course, we want to move away from the currency pairs and look at the other
look at commodities. From a commodities perspective, what we've seen, as I mentioned, is that you saw the price of Brent crude, which is up 6.4%. To $74 a barrel. We were comfortably below the 70 mark, but the commodity has reacted sharply to the news that transpired overnight. From a gold perspective, the price of gold is down 1.3% to $4,053 an ounce. We continue to see the price of gold correct. If you recall, at the turn of the year, the gold price was at about 5,500. It peaked at about $5,500 per ounce. So it's lost almost 30% of that value, and we see it correct. So in an investor's mind, part of it is investors are balancing, or portfolio managers balancing between different types of commodities, and also just a reassessment of the risk versus the opportunity.
Right.
So part of that is a sell-off in gold ETFs, liquid gold ETFs, by investors who are now opting to buy liquid equities.
Yeah, of course, 30% sounds a little sharp. But I do want to ask you, before we go, I know we've spoken a lot about what has happened in the energy sector, but based on today's numbers, we want to look at the equities as well.
Yeah, 100%. So from an equities perspective, the story is the same. It's really just a risk-off sentiment. If you look at it across the major indices, the S&P 500 is down almost a full percentage point at 0.9%. The FTSE 100 is down 1.25%. The JSE All Share Index, being an emerging market index, is down more at about 2% down. And this is really a reflection of the risk-off sentiment that's playing itself out. Equities as an asset class are seen as a risky asset class. So when there is more risk or perceived risk in the market, you will see investors sell out of equities.
Bongani, thank you so much for your insights. Bongani Mabuza, the head of Treasury from Nedbank Eswatini, a lot of diversification in terms of, what investors are trying to do with what he calls a risk-off sentiment climate within the market industry. We have come to the end of our program. Thank you so much for staying with us. You have been watching Nedbank Business Watch. We'll see you again next week. Goodbye.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Make better money choices. Choose a bank that takes your money seriously. Business Watch was brought to you by Nedbank.